Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to Kaiser Watch.
Jim, pleasure to be back on the show.
John, the CEO of Verde Agritech, has sold over $4 million worth of stock during the past month after the stock peaked in early May. Should we be worried?
Well, Jim, it always looks bad when a CEO sells into a downtrend because investors wonder if the CEO knows something negative about how the outlook for the company is unfolding. At the moment, what the market has been focused on is when will Plant 2 be ready? They had guided that it would be ready by Q3 of this year, and the market had kind of hoped that that meant July 1st rather than September 30th. But the vagueness, of course, gave the Verde Agritech some sort of a flexibility. And the reason it's important is the third quarter is an important selling and delivery period. Now, they currently have 600,000 tons per annum of capacity. Plant 2 will add $1.2 million tons, which would bring it to 1.8 million tons. And the company has recently guided that it expects to sell 1 million tons in 2022, and it expects to generate about $109 million. And that implies a price of about $600 per ton potassium chloride equivalent. And the price this year has been over $1,000 per ton. So the market's been wondering, how close are we to having this plant commissioned? And when I recently talked to Chris Veloso, he indicated it should be commissioned by the end of the month. Everything is coming together, and he pointed out that the 1 million ton guidance that they provided actually is more pessimistic than having it operational by the end of July. So there is nothing like something bad happening with the commissioning of Plant 2, which would be behind the selling activity by the CEO. Now, the market has been wondered, why has Verde Agritech retreated from its $11.54 price peak in May? And the reason has been that at the time there was a lot of concern about whether potash supply from Belarus and possibly from Russia would hit its target markets. And that was a very big concern because Belarus and Russia represent about 37% of global supply. And the bad news earlier this year was that Lithuania had decided to respect European sanctions against Belarus by saying Belarus can no longer transit its potash by rail through Lithuania for delivery onto ships at the Klaipėda port in Lithuania. And there was concern, well, how are they going to get it to market? And the obvious answer is to take it north to St. Petersburg. And if that wasn't possible, well, then we might lose 15% of global supply. Now, although sanctions have been placed against Russia since the Ukraine invasion for products such as oil, nobody has touched potash because potash is so important to the agricultural industry of the world that Lithuania just saying you can't come through us is one thing, but nobody has said you can't import potash from Russia or Belarus. So potash has continued to, somehow Belarus has figured out how to export it to the rest of the world. And potash is still arriving everywhere that it is needed, including in Brazil, though the price of KCl has not come down significantly. But we have seen the prices of potash-connected stocks such as Nutrien and Verde Agritech come back down in the last while, and that probably has something to do with the realization that we are not going to see a horrific supply crunch in potash. The high prices we are seeing are simply due to high demand from crop producers. The really big crisis in terms of famine is, of course, the Russian blockade of Ukrainian exports of grain and other agricultural products. And this is going to be a horrific problem for North and East Africa, which depends very much on grain imports from the Ukraine. And this is a crime against humanity that Putin and all his enablers are committing against the world, especially against those parts of the world that do not have an alternative source of grain. And insofar as the rest of the world will make grain available for these parts, that will mean higher prices for everybody. But none of this affects the plans of Verde Agritech to finish commissioning the 1.2 million ton per annum expansion. They've already decided that as soon as that is done, we will begin work immediately on doubling the capacity, and that should not take quite as much time. They think they'll have the 2.4 million ton per annum capacity in place by the end of this year. And then they have the longer term plan of going to 10 million tons per annum using existing road networks, and ultimately go to 50 million tons per annum, which would represent more than 50% of Brazil's potash requirements. So the problem of Brazil's dependency on importing potash from elsewhere, that has not gone away. The fact that potash is still being delivered everywhere in the world does not harm the Verde Agritech story. And the plans to expand and sell the alternative potash in the form of K-Forte to the Brazilian farmers, that's still the primary story for the company. Now, why did Chris start selling stock in the past month? Well, on May 24th, the company announced that it wanted to re-domicile itself from the United Kingdom to Singapore. And there were some complex Brazil-related tax reasons for this, and also this idea that they would like to sell their higher-end products into the Asian markets, and Singapore might be a better home base for this to happen. But this re-domiciling requires a 75% approval of all votes cast. And this meeting, the special meeting, is on July 14th, which is next week, and Chris had concern that he would not be able to have the 75% approval from the votes that he cast, or that were cast by people supportive of their re-domiciling. So what happened on May 31st is that insiders went on an option exercising rampage. And these options were around 61 cents to 63 cents. And the insiders, who are clearly Brazilian and based in Brazil, they did not do any selling, because they do not have a problem that people in the United Kingdom, in Canada, and the United States have when they exercise options. When you exercise incentive options, the difference between the market price on the day of exercise and the exercise price is deemed income by the tax authorities, whether or not you ever sell any of the stock. And this has bankrupted many insiders in the past who exercised in the money options, didn't sell, and then the market turns sour or something goes wrong with the company, and their shares end up worth a lot less than what they were when they exercised, and yet the tax department insists that you pay the marginal rate of your income marginal rate on that deemed gain, whether or not you ever received it. And in recent years in Canada, they introduced a rule that if you want to exercise your options, they look at what the price in the market is, and they say you have to come up with 35% of the difference as a withholding. So you will often see insiders exercising stock and selling at a significantly higher price all simultaneously, because they have to come up with this money. Now, in the case of what Chris did, he's based in the United Kingdom. They don't have that withholding problem, but they also have a similar deemed income problem. And so when his position was, he had about 9.4 million shares or 9.5 million shares on May 24th when they announced the plan. Since then, he has exercised 1.1 million options, and he has sold 495,000 shares at an average price of $8.40 for gross proceeds of about $4.2 million. And if you take, say, $8.40 as the average deemed price for these sales when this happened, he probably has a gain of about $8 million, for which his tax liability is likely $3 to $4 million. So to a large degree, what we've seen is him make sure that the stock that when he exercises these options, that he's got the money in the bank to pay for the liability that comes due next year. Now you might say also, well, doesn't he, can't he just sell some stock in next April when the taxes are due and pay it then? I mean, he's sitting, after this exercise, he now owns he owns 10.1 million shares, just under 20% of the company. And, you know, when the stock was $11, he was worth over $100 million on paper. And with such a large position, why bother selling now when you can sell next year? Well, you never know what sort of catastrophe that can hit your company, the market, who knows what. And I suspect that also he was probably getting pressure from his family saying, okay, you convert your salary into stock in this company, which is great. Yeah, we're going to be worth a fortune when this hits $100. But how about taking some money off the table so that we can pay for some real things and not just dream about Verde Agritech one day being a $50 to $100 stock when it is delivering 50 million tons of K Forte to the Brazilian market and even more for the very specialized markets. So that's what I think this was all about. It was partly to make sure that they have enough votes. And when I talked to him recently, he indicated he's no longer worried that he won't have the 75% to make this happen. If this, goes through as he expects, the change will happen on July 25th. And that also sets the stage for pursuing a listing on NASDAQ or the New York Stock Exchange. And that, I think, will be a very positive development, because then this story becomes available to an institutional audience that is interested in an agricultural growth story, and one that also has a technology spin to it, plus one, because of the nature of the alternative potash that we see with K Forte, there's also an ESG credential to it, which will make it very attractive to those funds who want to be investing in companies whose growth has something to do about making the world a better place. So while it looks bad that the insider, that the CEO is selling while the stock is declining, it wasn't the case at all. He's still fully on board, and we will see in the next month when this redomiciling to Singapore is done, if they get their NASDAQ and or New York Stock Exchange listing, and we'll see what happens then. And hopefully by the end of this month or early August, we get news that, yes, the plant has been commissioned successfully. We are now grinding and bagging K Forte for deliver to the farmers of Brazil.
Is there anything interesting in the latest exploration update from Eskay Mining?
The latest news release, which reports on the drilling done so far at the Eskay project in the Golden Triangle, there's both a negative and a positive message to it. Now, I'll address the negative message first. They have completed 13 holes for 5,370 meters on the Jeff target, actually an area north of the Jeff target. Now, the Jeff is north of the TV target. When I talked to John DeDecker late last year, he seemed more optimistic about the potential of the TV area to the south than the Jeff area to the north. So I was a little surprised to see that their initial drilling is focused on the Jeff area. And but that may have something to do with logistics. Now, it's clear from the numbering of their holes that they have 2 rigs working, and interestingly, they included a diagram which has 17 holes plotted on there. So there's 4 additional holes that they aren't talking about in this press release. They provide photos for 3 holes, which indicate, yes, we are intersecting, sulfide replacement mineralization in this new target area to the north. They've extended it now 1.5 kilometers to the north. But when you look at the photographs and you look at where the drill is now, which is not beavering away in the area of those holes, you can tell that they have not yet hit that 21B zone equivalent discovery hole, that 109, which the market is waiting for to show that, yes, we have finally tagged into a major massive sulfide lens that's going to be rich in gold and silver. They're still demonstrating the extensiveness of the VMS system in this TV-Jeff corridor, but I regard this as kind of a negative news release because we're waiting to see that barn burner hole that says now we have the focus, because the drilling in the past 2 years in this area, they've got some great intersections, but the tonnage footprints they've delineated are still relatively small. They do not yet have an ore body in this area. Now, the part that really intrigued me about the news release was when they started talking about Scarlet Ridge. Well, Scarlet Ridge is an area in the northeastern part of the Eskay project. It's actually somewhat east of where the existing Eskay 21B zone exists. It's had very limited exploration. And when I talked to John DeDecker late last year, he was very intrigued by what the field work had generated up in this area. He says the drilling that was done there was focused on a part of this area that wasn't really targeting a VMS type of model. And based on this news release that they just put out, which includes several important diagrams that we have not seen before, the fieldwork has generated additional understanding about what is going on. And they are going to be moving one of the rigs into this area to drill at least 5,000 meters. Now, the reason I really like this news release is that John DeDecker created a cross-section showing that the stratigraphy is on its side. There are at least evidence of 2 time horizons where you had seafloor debris flow that has sulfide replacement mineralization in it. The fact that they are spatially separated by mudstones indicates that these are 2 different pulses of activity, likely passing through the same area. And the diagram also indicates that the flow of the fluids, the hydrothermal fluids, was from the west to the east. They've got the sort of rhyolite silicified stockwork that you see in the feeder system. So what we're looking at here is a target that's absolutely virgin. It's got considerable strike, and all they will need to do is start drilling angle holes through this. And this I find much more exciting than continuing to poke around in the TV-Jeff area, where they've spent 2 years testing these SkyTem targets and finding interesting stuff, but never finding a very large lens that starts to hang together. This Scarlet Ridge area is a brand new play, and once they get drilling in there, if they start intersecting broad intervals of gold-silver mineralization, that will really kick off this market. Because you think back to 1989-90, when Calpine and Stikine were drilling the Eskay project, they had the 21A zone. There was lots of smoke there. They had ore grade intersections, but it wasn't until hole 109 that they tagged into the massive sulfide lens that is the 21B zone, that is enriched with gold and silver, and that had 2.5 million tons of 1 ounce gold and 200 or 100 ounce silver. And this is the sort of prize that we're hoping Eskay Mining will tag in the Scarlet Ridge. Obviously, it's too much to expect that they hit it right away, but they do based on the news release, John DeDecker has a good understanding of the geology and the stratigraphy in this area. And when they start getting the 3rd dimension, if they demonstrate that this model, this cartoon, is correct, and they start showing the grades. And of course, you won't see the silver gold grades until we get assays. So assuming in the next few weeks they get going and they got drilling, it probably will be late September or early October before we have the assay confirmation that they have an emerging discovery in that area. But I think this was the positive part of this news release. Now, the other rig's going to be doing more work in the TV-Jeff corridor, and so they may yet tag into a 21B zone equivalent lens, but they haven't got it yet. But it's this Scarlet Ridge area that has me excited about what we might see between now and the end of the exploration season sometime in late October.
Iamgold reported final drill results for the Nelligan gold project, in which Vanstar has a carried interest. What's next for Nelligan and Vanstar?
Well, the real question is what's next for Iamgold? Iamgold is a mid-tier gold producer, produces about 600,000 ounces annually. Its key mines are Rosabelle in Suriname and Eskay in Burkina Faso. Eskay produces about twice as much gold as the Rosabelle project. They also have the Westwood Mill in Quebec's Abitibi area, which gets fed ore from the Doyon mine. But because of the nature of the Doyon mine's mineralization, they can't feed enough to have Westwood at full capacity. So that mine there is a bit of a headache for the company. But the real flagship for the company is the Cote project. They bought that in 2012 for about $600 million value takeover bid of Trelawney. In 2020, they made a decision to build Cote. By then, they had attracted Sumitomo as a 70-30 partner, and the capex at the time was $1.3 billion. Now, by the end of Q1 of this year, $600 million had been spent on constructing this mine. But in early May, Iamgold guided us that it would cost $1.2 to $1.3 billion more to complete Cote by the end of next year. And that's a cost overrun of $500 to $600 million. Iamgold already has $1.7 billion debt. And this stock, which during that gold boom between 2009 and 2012 traded at $22, it had been trading in the $3 to $6 range. On that news, it dropped to $2.60, and recently it has dropped even lower as Bay Street analysts give up on the company. And the question now is, what is the future for Iamgold? And one option is for them to sell their South American and African assets. Now, the African assets are more of a focus for the company because they have exploration projects in Mali and Guinea and Senegal, whereas in South America, they just have the Rosabelle operation and another project in Brazil. So the valuable assets really are the African assets. And if the company ends up selling these and focusing on Canada to finish developing Cote, then the Nelligan project becomes a high priority. And one of the big uncertainties for Vanstar, which has a 20% carried interest in this project, is that we have not been clear as to where Nelligan sits in terms of Iamgold's development priority. They announced a resource estimate, a maiden resource estimate in late 2019. It was a pleasant surprise, 97 million tons of 1 gram per ton gold, representing 3.2 million ounces of open pitable ore. They used a 0.5 gram per ton cutoff based on 1320 gold. But then in 2020, when COVID hit, nothing seemed to happen. Last year, they finally got a program underway. They've drilled 9,500 meters, which chased the Renard zone, which is the key part of the Nelligan deposit. They chased it westward, extended it about 1.5 kilometers to the west, and they also drilled some holes underneath the pit. And the results that they reported this past week, they were the final results for these holes under the pit. And this was actually very positive news, because what it showed was that the deeper holes going through the Renard zone, the grade is good, it's strong, it's even better than the average higher up. And this means they will be able to deepen the pit and expand the resource. Now, Iamgold has said, okay, we're going to do some surface prospecting work at Nelligan this summer, but we're not going to do any drilling. We're going to focus on doing this updated resource estimate. And what Vanstar would like to see is to see the resource grow into the 4 to 5 million ounce range. And the question is, how will Iamgold be able to do that? Well, there's several tracks by which it can do that. One, when they did that resource estimate at the end of 2019, we were still dealing with $1,300 gold. Now it's between $1,700 and $1,800 gold. And as part of that resource estimate, they published resources at different cutoff grades. And at the lowest one of 0.3 gram per ton, that added an extra 600,000 ounces. Now, if they're going to use a higher gold price in calculating their cutoff, just from the existing 3.2 million ounce resource, they can probably get a boost in ounces from that regard. But the other important part is deepening the pit. And of course, the offset for deepening the pit is that you had a 2.5-for-1 waste to ore strip ratio. The design, because this is a sort of an elongated body that dips to the south, and if you chase it deeper, that means you're going to have to remove a disproportionate amount of waste. But this is where these results, and the market seems to have completely missed this, had a pleasant surprise. The company Vanstar included sections of several of the holes in it, and it showed that this deeper hole, which penetrated the down plunge extension of the Renard zone, it passed through several more weakly mineralized zones that are parallel. The one that's most to the south is the Liam zone, and it's got a decent enough grade that the pit design actually had a small pit to take the shallower portion of that. But the weaker parallel zone, like 36 West, that was all waste rock. It wasn't included in the mine model. But where this hole passes beneath the pit shell, the 36 West zone, its grade improves. And that's really a positive development for the project, because this means that as they expand, they push back the pit wall, they're not mining waste ore. They're probably going to have ore grade material that can feed the mill. So both from deepening the pit and also widening the pit and taking this deeper, better grade 36 West zone mineralization, they can add ounces that way. But the biggest boost that the market's waiting for is what happens with Renard when you push it west 1.5 kilometers. Now, the Renard zone does narrow as you go farther west, and the density of drilling that they've done, it's, they probably can only include up to about 750 meters of the extension to the west in the updated resource estimate. And this is, of course, something that the mine modeling experts do, so we are flying blind as to how much of the extension that they will be able to increase. But you can see enough there for it to be reasonable to speculate that when this resource estimate comes out sometime before the end of this year, we will see a resource in the 4 to 5 million ounce range. Now, what's going to happen then? Well, obviously the next step would be for Iamgold to start doing feasibility demonstration work. And the reason the stock Vanstar Mining has been sort of a real market laggard, and why I have given it a bottom for spec value ratings rather than a fair spec value rating, is that we have been very uncertain about when will Iamgold advance it. Now, this financial existential crisis that the company is in right now, this is going to change things dramatically. Now for Iamgold, there's three paths. One, they unload their South American and African assets and raise the money so that they can finish Côté and then focus on Nelligan. Another is bankruptcy, which means that somebody else is going to buy the assets out of bankruptcy, and when they acquire Nelligan as part of that, they'll be able to look at it from a fresh perspective. It won't be this thing you can't put any attention on because Côté is your primary financial opportunity. And the other possibility is that Iamgold might sell Nelligan to another mid-tier producer. So that raises the question of, well, what could they get for it? Now, the other thing that the Vanstar market has been sort of unclear about is, well, what is the Nelligan deposit worth if it were put into production? And last year I did an outcome visualization where I borrowed the cost numbers from the January 2021 pre-feasibility study of First Mining Gold for its Springpole project in Ontario, and that's a 30,000 ton per day open pit scenario. And I used that, applied it to the Nelligan project, and it would produce about 2.9 million ounces over 9 years, based on the what they currently know about the metallurgical recovery. And when I modeled this, the value comes in right now at the miserable gold price of $1,740 or so. It comes in at about Canadian $1 billion. Now, since this project's still in this limbo zone between a resource and a PEA, under my rational speculation model, at best you can assign a 10 to 25% of the future value as a fair value for right now. So that means if my modeling is within the sort of ballpark that anybody else looking at potentially purchasing this asset would be doing, the project would be worth $100 to $250 million, which for Iamgold's 80% interest, that would mean a price range of $80 to $200 million. And given that there's a resource expansion in the works, so it's probably going to be bigger and better, it's plausible to think that, well, if they wanted to sell it, that would be, maybe they'll get $200 million for it. But I don't think that comes close to solving their financial problems. And if they do want to stick with Côté and make that its flagship and retreat back to more secure jurisdictions such as Canada and start expanding there, I don't think that's going to happen. But in terms of seeing where Vanstar might end up going, if you take that future $1 billion value, and they do have a carried interest, that 20% interest results in a future stock price of $3 based on the 65 million fully diluted they have right now. But Vanstar isn't just about waiting to find out about what what's going to happen to Iamgold and what will happen to Nelligan as a result of whatever happens to Iamgold. Last year, they managed to persuade Iamgold to auction them 75% of the Bousquet Oneida project, which is just south of the Westwood Mill. Now, this is a project within the Abitibi belt along the Cadillac Larder Break, and Iamgold had done some near-surface drilling in the hope that they could quickly cobble together an open-pittable resource, mine it, and feed the Westwood Mill with that ore. But they gave up on that. They didn't get the continuity that they were hoping for. So this was just a stranded asset. And so the Vanstar approached, J.C. Moore approached Iamgold and said, why don't you auction this to us and we'll start chasing it down plunge to see if it gets better at depth and there's a potential a high-grade underground mineable resource that could feed the Westwood Mill. So they did the deal, where they can earn 75% by spending $4 million over 4 years. And after that, Iamgold, if it wants to, can back in for 50%, so it's a 50-50 project, by spending 4 times what Vanstar has spent on this project. And they started a 9,000 meter drill program in April. They've reported results for 7 holes representing 2,500 meters. They've allocated the drilling. This zone, this Eskay zone, has sort of 2 chutes in it and sort of weaker mineralization in between. The one hole that was really good was number 63. It was the deepest yet on the main chute, and that was 21 meters of 5.23 gram per ton gold. So that's really good. The other holes were more in between the chutes, where they were hoping to maybe stitch that together and show that Iamgold wasn't entirely correct in dismissing the potential for an open pitable resource. And some of those have delivered interesting numbers, but nothing really to make the stock take off. But they've finished the program now. They are sitting on the results of the remaining holes of that 9,000 meter program. They'll be trickling in between now and the end of August. There's at least one hole that's deeper than hole 63, and apparently they do have holes into that other chute. And the other chute doesn't have a lot of deep holes because it seemed to be petering out. But we'll see what they come up with in terms of the drill results that come from the Eskay project. And when this is all done, they'll have about $2.5 million left in working capital by the end of the year. It'll all be hard dollars. They'll be able to decide what to do with the Eskay project. And by the end of this year, we should know what is going to happen to Nelligan. And I suspect that no matter how it works out, there's going to be a much greater emphasis on fast-tracking Nelligan as a future gold mine in Quebec, in that area southwest of Chibougamau.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.